Welcome to our information session on the Idaho W4 worksheet. We're going to talk about the tax changes that happened at both the federal and the state level and how those changes affect you and what you need to do to respond to those changes. So let's talk a little bit about the federal tax changes that happened. At the federal level, they changed the tax rates. That doesn't really affect Idaho, but a few of the other changes do affect Idaho. The changes that affect Idaho are the fact that the standard deduction changed. So the standard deduction for a married filing joint couple went from $12,700 to $24,000. It almost doubled. So that is one change that happened. The other change, major change that happened, was that the exemption for personal and dependents went away, basically. So the $4,050 that you were getting for those dependents and for yourself and your spouse went away. The feds thought that with the increase in the standard deduction and the decrease in the tax rates, that would kind of compensate for the fact that you lost those exemptions. So that's a few things that happened at the federal level. Idaho also did their own tax reform. For Idaho, what they did is they lowered the tax rates as well. So all tax rates were reduced by 0.475 percentage points. That means that our top tax rate, which was at 7.4%, is now down to 6.925%. That means, of course, that we're below 7% and makes us competitive with surrounding states. Another thing that the Idaho legislature decided to do was to enact an Idaho child tax credit. That's something we've never had at the federal or at the state level before. So what that means is we have a $205 non-refundable child tax credit for qualifying children. Qualifying children is the same definition as at the federal level. So I know that you've probably heard 17, the number of 17. It's actually that they have to be under 17 as of December 31st, 2018. So if Johnny turns 17 in April, he no longer qualifies in 2018. You have to be 16 and under. And we'll go through this a little bit more here in a minute as we go through the worksheet. So let's look a little bit about our worksheet. So for Idaho, we have a worksheet. The feds also have a worksheet, and it's probably best if you go out and look at the federal website, so irs.gov, go out and look at their worksheets and or calculator. I tried looking at the worksheets and got a little discouraged because they're just a little lengthy. So they actually have a calculator that's really pretty cool to use. You're going to need a few things if you use that calculator. You'll need to probably get your 2017 tax return because there are a few things on that tax return they're going to ask you. The other thing you need are some of your pay stubs for both you and or your spouse. Those things that they ask you are going to be things like how much withholding do you currently have year to date, how many more pay periods are there in the year, those kind of things, so you can gauge if you have the right amount of withholding for this year. So for Idaho, we don't have an Idaho-specific W-4. We use the federal W-4 to put that number for Idaho on there as well. So what we want you to do is go through our worksheet, and we'll go through this section by section so you can understand how it's supposed to work. And then at the very end, there's a federal W-4 that shows how we want those numbers to be shown on the federal W-4. a question was asked of me is, so do the payroll companies and HR departments know that this is what's expected? You know, are they going to expect to see these two numbers now on a W-4? And the answer is yes, they are. When we updated our withholding guide, and I've also done some of these trainings for HR departments and payroll clerks, they are very well aware that there is a federal and Idaho number expected on the federal W-4 now. They'll be looking for that. So if you decide to update your W-4, which everyone should do, then they are expecting to see a number with a slash and another number. The first number will be a federal number. The second number will be an Idaho number. So they are expecting to see that. So let's look a little bit at the W-4 worksheet that we have for Idaho. If you look at the worksheet, the first thing you're going to see is a box. And the box says, which box in Section 3 do I check? So if you look at the W-4 for federal, there is a box, a Section 3. And there's a box there, and it's like, okay, so what filing status am I? So we did a little bit of a tutorial for this to say, okay, if you're single in one job, you're single, of course. Single with multiple jobs, you're still single. Married filing joint with one job, you're married. The big change you're going to see is married filing jointly, and both people work or you have multiple jobs. And the change there is that we want you to check married but withhold at the single rate. The reason for that is that with both of you working, you may not have the correct amount of withholding if you both, say, withhold at 1 or 2. You may be under withheld. This also is the same guidance that you're getting from the federal government on this, from the IRS. They are asking the same thing, that if you're married and both of you are working and you're married filing jointly, we want you to withhold at the higher single rate. So you would have the most amount of withholding, and hopefully it will mirror and match what your tax liability will be. The other thing is filing as head of household, that's going to be single. So this should help you decide how and which box you check for that Section 3. So let's move on. We've also done a box to say which parts of the worksheet do I complete. So if you're looking at the worksheet, it's like 2 pages front and back, and you're going, how much of this do I have to complete? So we've made a little box for you that said if you have children that qualify for the child tax credit, we want you to complete Part A. Part A is not just for the child tax credit. It's if you, well, I guess it is kind of for the child tax credit, but if you are head of household, we need you to look at that box as well. If you plan to itemize, you would need to look at Part B. There's going to be a lot less people that will itemize this next year, more than likely. As we talked about before, the standard deduction has almost doubled for each filing status. And with that, less people will probably itemize, as well as the fact that at the federal level, a lot of those itemized deductions are either limited or they have gone away, some of them. So the way that you look at Part B is to take your last tax return. Did you itemize? And go look at the bottom of Schedule A and look and see how much you actually had on that line. If it was less than your new standard deduction, so for married filing jointly, say your Schedule A said $20,000. Now you're going to get a standard deduction of $24,000. So it would not be advantageous for you to itemize. You're going to just take the standard deduction and be done. So that you might say, well, you know, some of those things either have been limited or gone away. How do I figure that out? Well, you would just need to look at what you used to itemize last year And you can kind of do some kind of calculations if you want, but a general rule of thumb would just be to look at the bottom of Schedule A and decide if you probably think you might need to itemize. So then we'd look at Part C. Part C is if you're single or married filing separately with more than one job, then you need to look at that. You need to look and see at those other jobs that you have. So say you have a main job that you work at that's maybe you make $50,000, but you have a second job that you work at Home Depot on the weekends, and you only earn maybe $5,000. That $5,000 that you get from Home Depot is still included in your tax return when you get ready to file as income, but that $5,000, there's not enough income for you to have any withholding done on it. So when you get ready to do your tax return, you have this extra income, but no extra withholding. So you might end up and have a tax due because there's not the withholding to offset that income. So that's why we're asking you to look at this Part C and see if you need to have any extra withheld for that other job. So then there's this last box that says, if none of the above situations apply, what do you do? The reason that box is there is I was doing one of these presentations and somebody said, well, none of those things apply to me. I don't have any children, I'm not going to itemize, and I don't have a second job, so I don't have to do the worksheet, right? No, that's not the answer. The answer is you still have to have an Idaho number. You can't just ignore the fact that nothing applies to you, and we still want to see an Idaho number. If you take this to your HR department or whomever you turn this into and you don't have an Idaho number, what are they going to use? They may use the federal number. And the problem with that is if you go through the federal worksheet or the federal calculator, the way that the federal government makes it this year at least is that you could end up with 12 allowances. Do you really want 12 for Idaho? Probably not, because if you look at Part A, we're talking mostly about allowances for the child tax credit. You probably don't have 12 children, so it's probably not a good thing. So again, if nothing applies, we want you to enter 0 in that W4 line 5. And there is actually a copy of the federal W4 again at the very end of this presentation, so it's something we'll look at here in a minute. So that should give you a little bit of an idea of what your filing status should be and what parts of the worksheet you need to complete. So let's go through the worksheet part by part and try to decipher some of this. So Part A says child tax credit allowance. It really should say Idaho allowance because it's not just for the child tax credit. So let's look at this. It says enter the number of children in your household age 16 or under as of December 31st, 2018. Again, 16 or under. It's not 17. If Johnny turned 17 in April, he doesn't qualify. As long as at the end of 2018 he is 16 or under, he is a qualifying child. And again, that's those federal requirements for a qualifying child. So not only is it age requirement, but they had to have lived in your household. And, you know, like I said in one of these other presentations, they eat your food, they sleep in their beds, you're taking care of them for the whole year. So that's what a qualifying child is. If you're married, we ask that you claim these allowances on the highest paying job. So we have an example here that says Bill and Terry are married. They have 2 children, and since Bill's job pays more than Terry's, which I'm not sure why, but Bill's job does, he claims the allowances for both children. If they both decide to claim the children, or Bill claims 2 and Terry claims 1, they could have the wrong number or the wrong amount of withholding. And when they come to the end of the year and file their taxes, they could owe because they have not, they've basically double counted one of the children if she claims 1 and he claims 2. So we're asking that you do that on the highest paying job. That gives us the most accurate amount of withholding if you do it on the highest paying job. Line 2 says enter 2 if your filing status is head of household. Why would we tell you to do that? Maybe I don't have any children. Head of household, maybe I have somebody else that I am using as a dependent or that I'm caring for that causes me to be head of household. So why would you tell me to put 2 on my filings under here? Because I don't have any children. That's why we said Idaho allowance, not child tax credit allowance. If you remember, we were talking about the standard deduction. Standard deduction for single went up to $12,000 for 2018. For head of household, it's $18,000. So there's a $6,000 difference. And when we looked at doing our tables, we thought, oh, we'll just do another table for head of household. Since they have a different standard deduction, let's just do a different table. That's the way we'll take care of it. And in talking to some people, they said, what do you mean another table? We've only had 2 tables. It's always been single, including head of household, and married. What are we going to do with another table? How are we going to deal with this? And so we looked at it again and we said, okay, the difference between single and head of household is $6,000. Okay, so the child tax credit is $205. If you translate that into income dollars, it's about $2,960. Take that times 2, and you're really close to $6,000. So that's why the 2 for the head of household, that makes up the difference in that standard deduction difference that we have between $12,000 and $18,000. So that's why the 2. Then all you do for line 3 is total 1 and 2, and that's your Idaho number that goes on line 5 of your federal W-4. If you have nothing else to complete parts B and C, you just enter that number and you're good to go. So that should take care of part A. Let's look at part B. It's those itemized deductions. And again, you may or may not itemize this year. It depends. So if you're married and you both work or you have multiple jobs, you may need to complete this, and you do it for the highest paying job. Again, that always gives the best amount of withholding, the most accurate amount of withholding. If you don't think you're going to itemize, then you just skip this and go to part C if you need to. Again, we just kind of walk through this and we say you enter the estimated amount of your 2018 itemized, probably looking at your 2017 is the best gauge to do that. We've given a few things of, for examples of itemized deduction for qualifying mortgage interest, those kind of things. Just don't include any local income taxes or general sales tax here. We're just talking about those itemized deductions because the local or state general sales tax for Idaho are not included. We actually ask you to add them back for Idaho. So that's why we don't include them here. Then you would compare that to the standard deduction for your filing status. Again, if your estimated itemized are less than your standard, you might as well take the standard and be done. Don't worry about itemizing. Then what we ask you to do is if you have more than your standard deduction for your filing status, we would ask that you take that amount and divide it by 2,960. Again, if you remember, we were just talking about that number, and that's the income amount for the child tax credit. You divide that difference between your itemized deductions that you think you're going to have and your standard. You divide it by the 2,960 and you get a number. Round it down. If you come up with 2.4, you round it down to 2. You enter that number from line 3 that you had in part A and add it together, and you get your number that you need to put on line 5 for your W-4 form on line 5. So again, that's itemized deductions. Let's look now at that Part C. Multiple jobs. So if you completed Part B, if you thought you had itemized, then you have a number on line 9 that you're going to enter here, because we need to do a little bit of calculation on how to do this. And this is for jobs other than your primary job. So I had somebody ask me, they said, well, you know, what if I had, say I worked for, I don't know, Home Depot. Decided, you know, after a couple of months, I'm tired of Home Depot, I'm going to go work for Walmart. And then after a few months, you say, oh, well, I'm tired of Walmart, I'm going to go work for Fred Meyer. And when you do that, he said, well, I've had 3 other jobs. Yes, you have had 3 other jobs besides your primary job, but not at the same time. You didn't work at Home Depot, Walmart, and Fred Meyer all at the same time. So that's why we put in here, how many jobs do you expect to have at the same time as your primary job? You may have more than one at the same time. I don't know, but that's what you need to take into account. And a lot of times, like we were talking earlier, those secondary jobs that you have don't pay as much. You know, you have a primary job that you have a wage of maybe $50,000 at. But that primary job may only be on the weekends or just a few hours a night or something. So you need to look at that, and more than likely you won't have any withholding done on that. So when you don't have withholding done, that income still comes into your tax return, but there's no withholding for it. So then when you come to the end of the year, you may owe something because you have extra income and no withholding. So that's what this is for you to look at that and see if there's an extra amount that you need to have withheld from your paycheck. This is not another number you need to add to line 5. This is an extra amount to withhold. You've already decided how many allowances you need. Now you need to decide, are those allowances enough, or do I need some more withheld to make up for those jobs maybe that I have? So that's what this is all about. Again, you can go through the worksheet and figure out how much you might need to have withheld. The feds do this as well. If you go through their calculator, this happens on their calculator as well. So again, here's the W-4 that we've been talking about. It's a sample. And on this sample, line 5 shows 6 as their federal number. They've gone out to the IRS calculator. They figured out that 6 is the number they need for feds. So they're showing 6, and then a slash, and then 4. So 4 is their Idaho allowance number. Then if you look at line 6, they've looked at this and said, I don't need anything extra withheld for federal, but I may need another $25 per pay period for Idaho. So that's what they're going to turn in to their HR department. The last thing I have is a little scenario. So let's look at a married couple that has $50,000 of annual income. Their W-4 currently shows married with 4 allowances, and that's valid. They have 2 qualifying children, and they have the husband and wife, so that's the 4 people. And before that was all well and good because the tables were balanced out for that. So if you look at their 2017 income, they have the $50,000. They have their standard deduction of $12,700, which was the standard deduction for 2017. They have exemptions of $16,200. That's those exemptions that we talked about that went away. So they had taxable income in 2017 of $21,100. The tax on that is $1,056, and you'll have to take my word for it. You can actually go out and look at the 2017 tax tables that we have published and look at taxable income of $21,100 for a married couple and 4, and it should come out to $1,056. The withholding that they had, according to our tables that were published in 17, was $1,369. So in 17, they would have gotten a refund of $313. They did pretty well. They calculated it pretty well. So let's look at 18. Let's say that they don't change their W-4. They say, oh, we're good. All this stuff that they're talking about, it's no big deal, right? So, $50,000 income, their standard deduction's gone up, $24,000. However, those exemptions went away. When those exemptions go away, their taxable income goes up. They now have $26,000 of taxable income. And yes, the tax rate went down, but tax on $26,000 is now $1,281. Their withholding, since they didn't change anything, they're still withholding now at married 4, which means their withholding is $501. They get the child tax credit for those 2 children, which is $410, but now they're going to have a tax due of $370. And again, I didn't say this earlier, but we did not take into account if these are Idaho residents and they get the child, or excuse me, not the child tax credit, but the grocery credit, then yes, they're going to get $100 for each one of those people. But that means that in 17, their refund would have actually been probably $713 for those 4 people, plus their refund of $313. If you look at 18, and they haven't changed anything, yes, their tax is $370. You give them the $400, and they're still at, maybe a $30 refund. But that's a lot less than they got in 17 of $713. If they correct their W-4 as we're asking them to do, and change to, their W-4 would then be married 2, because they have 2 children. Their income is still the same, standard deduction is still the same, their taxable income and tax are all still the same, but now their withholding has gone up to $886. They still get that child tax credit, so now they end up with a refund of $15. Again, they get the $400 for the grocery credit, and you have $415. So as you can see, if you don't correct your W-4, it could mean that you owe extra tax when it comes to April and file your tax return. So that's why we are asking everybody to go out and change their W-4, at least take a look at it. It doesn't mean that you have to change it, but go take a look at it. We don't want anybody to come up with an unexpected tax surprise when they file their return in April or before, and say, oh my goodness, why do I owe this much money? It's because you didn't adjust things. I know when I was looking at this, I've worked for the Tax Commission for 10 years. And when I started at the Tax Commission, I filed my W-4 as married I had 2 boys living at home. So my W-4 said married 3. And now it says married 0. The reason being is both my husband and I work. The boys are no longer at home, but since we both work, it should be married 0. So that's what I changed mine to. Hopefully, in years past, I've had to write some sizable checks. So hopefully this year, it will be a little less. And that's what we're hoping for everybody, is that if you go out and adjust, maybe you'll be really close to what you owe. On our website, we have a panel that says avoid a tax surprise. And that's what we want you guys to go look at, is that panel. It has a lot of information. It has how to compute your tax liability. So it walks you through how you would figure out what your income is, how you compute what your tax liability is going to be, and then you can try to figure out how much your withholding should be and try to adjust it. You can actually go look at the tables and decide if what you're putting on your W-4 matches what your tax liability will be. There is more information out there on our website as well for retirees. We had a lot of questions as we were doing, we've done some of these presentations for various groups, and we've always had questions about, well, what about if I'm retired or my spouse is retired? How do we account for that income? And you do need to account for that, because a lot of times that income may not have withholding done on it. So you either need to talk to your provider for your retirement benefits and see if they will withhold, and if they will, then give them something to tell them how much you want withheld, or do it yourself. You can always look at your income and say, I've got an extra $5,000 that I know I'm getting, or an extra $20,000, however much it is. And you can go out and figure out how much, according to your filing status, what your tax is going to be, and how much you need to hold back or have withheld for that. So I would encourage everybody to go out and look at our website. There's a lot of information, and please take a look at your W-4. See if there's something you need to do in that area. Thank you.